Some time has passed. Revisiting Facebook, did a Secretwars episode, Stan Weinstein style, with my chart trading framework. I think back in May, right about here. And I said that Facebook was poised for stage 2 continuation, and it did look like that right there. Right here. Broke out. Oh, wait, I'm going to hide that. There, hide those candles. And right about here. Had to close above 187, 188. There's some warning signs though there. There's a whole bunch of things. The higher you go up, original breakout, continuation breakout. These are on monthly candles. Another one here. This is a warning sign. We'll go on the weekly. We're going to check it out. I probably maybe did not notice that detail, but huge down days. I don't know if this was gradual the month. On huge volume is a warning sign. And the more you add of those, sometimes the stock recuperates. A lot of buyers right here. You see those two wicks at the bottom. Buyers trying to bring it back up. Buyers trying to bring it back up and barely close above the 12-month average. Still warning signs. You don't want to see that. You want to see it like this. And this is when your emotions get in. It's back. It's back out above the 12-month average. But these kinks in the armor, you don't want to be there. This maybe you could tolerate 10% pullbacks. But when you start seeing 188, 150, $30, that's 1/5, 1/6 pullback. Warning signs, guys. All right, you're back in, but were you still supposed to be in the stock at these levels? Whereas your sell stops in place? Were you drawing trend lines? Your exit points, where were they? You got to reevaluate. Sometimes you get lucky. The market keeps pulling it back up. But could have went sideways, could have went down. So these are the first warning signs. Listen to the signs. Like before you start getting sick, you get a little cold, you get shivers, start coughing. Well, take care of yourself before it degrades. And what happened after that? Went back up. But then here come in the sellers. Bring back down here. Indecision right here. Spinning top. And the next month went super high. Sellers, you're going back down all the way here. Close below 12-month average. Price action less and less above the 12-month average. 12-month average trying to go angle downwards. Now we have price action below the 12-month average. And the whole scenario changed. So a few months later, 1, 2, 3, 4 months later, we're fighting to stay alive. Facebook is open 157. So a close below 158, 157.50 monthly candle close. We're just starting in October. We'll see what happens. You could easily have a wick that goes down and price action close back up, and then it's not a stage 2 continuation. It's not a buy. You don't want to buy if you're below 12-month average, but you might get a pullback here, and then maybe another retest, and then down. Kaboom! Maybe. Who knows? Keep an eye on it, but right now, you definitely don't want to be in the stock until you're at least above the 12-month average. And now, more than that, you want to be above monthly defined resistance, guys. Because what happened is all these people that bought up here that got trapped, some of them sold here that had sell stops, but the people that didn't hold, that didn't have sell stops, are still holding strong. Well, they might want to sell on the way back up here. And that's why the price action could have a tendency to go back down It's because now all these people here, when the buyers are coming in, they're bringing price back down by selling. They want to get out. I want to get out even. Oh no, I'm just happy there's rally, and so they fade. These rallies start fading and go back down, and they're just pullbacks and not reversals. That's how it's constructed. That's how these big tops, the volatility, these huge moves in price aren't an indicator of a stage continuation. They're more of an indicator of a market churn to decide where the next direction is going to be, guys. But right now, 12-month range is starting to go back downwards, so I'm angling towards a stage 4 breakdown. Cool. All right, weekly. Let's remove all that noise, all those lines. Okay. So, a nice stage 2 run up here. A little stage 3 right here. Stage 2 continuation up here. Zoom. Treated you very well. And look at that. Oh, okay. Huge candles. Not good sign. Look at that red candle here. Right here. Break below. Horizontal breakout line. Below 30-week average. But thanks again. He's at traderstageanalysis.net. Bring my attention. Ichimoku Cloud defined support. So if you don't want to wait, you don't want to short until you're through that support, guys. And you see how the price action of the buyers came back in to give it another go. Got to be real careful about that support. And on the monthly also, you want to make sure you have a close. It was hard here at this stage to tell. On this candle here, where the support was. Usually I go back down to see where my next, here could have been some identified support, some potential support that could have existed, but you would need to some tests of it to really see if that's the 150 was that important of a support. But when you go up for stage 2 like that for a while, it's not always clear where that support is going to hold, guys. But on the weekly, using the Ichimoku Cloud, you see that's monthly defined support right here. It gives you an idea of where you might have a slowdown on that breakdown. Price action goes back up. Everybody's happy. Oh, there it is. Yeah, not good. And you have that crazy. This one here. Not a good sign. So here you had remember, like I say, when you have a stage 2 breakout, so you have a stage 1 and then you have a takeoff pattern. And then it starts bring the 30-week average going upwards. Then you have another breakout. And usually by the second or third breakout, then you're in a full-fledged stage 2. Well, you could inverse that philosophy for stage 4s. But beginning of stage 4s, but a little bit more volatile. Oh, not the first breakdown. Oh, maybe the second. But with more volatility, guys. And here it is. 1, 2, and here's the third one right here. With a close below. So this candle right here is the ultimate short candle. So you could have been shorting this and then sideways move, can go back up. 30-week average starting to go downwards. Price action going back down through these small consolidations. And that's all she wrote, guys, underperforming the SPX. So there's a whole bunch of clues. If you don't want to short, fine. But a whole bunch of clues that you should not be in that stock. Why you want to be in the stock here that's going overperforming the SPX. Here is just danger. Danger already started a while back with this candle here, and especially right here. This is a very well constructed breakdown. Stage analysis, Stan Weinstein style. Could have some pullbacks here, maybe to this previous support, turn resistance, go back down. And that's it, guys. That's not very super duper duper for Facebook. Now right here. Yeah, on the monthlies, a breakdown here. But the ultimate breakdown on the monthlies, like I said, that level right here. So we have a close below 158. How's it going to look like on the weekly? Below 158 right here. If it close, yeah, so if this weekly close, this monthly close stays below here, it's really timber. Timber. And you got to remember, a lot of stocks, they give you great returns over the years. Most of the time, most of these leaders, they give a lot of them back, guys. So make sure you protect your capital. The name of the game is defense. Protect, protect, protect. And eventually you'll hit a winner here. And because you protected all these losses, or protected your NAV, when it starts going up, you have the necessary chips in your arsenal, your necessary NAV, necessary money to be able to have good position size and multiply that position size, multiply your NAV to go up and up and up and up. But if you really decide on hanging on when all the signs are negative, where you're below the Ichimoku cloud, where 30-moving average going downwards, it's going to erode your NAV. And next time you see a stock that explodes here, that you catch on to the next big winner, well, you won't have NAV, guys. Instead of having 100K, because you let it down, you're down to 50K, then you only have 50K to try right back up. So protect your NAV. Move it to another asset that's starting to explode, that's right here, and ride it all the way up. Or you short, and then you profit on the way down, guys. All right, that's it for me, man. See ya soon. And don't forget to subscribe if you like this. All right, guys.